what that could be. We are joined by David Madden, market analyst at Equiti Capital. Great to have you with us this evening, David. David, how much do these missed expectations on Chinese GDP impact sentiment on emerging markets like India and already a rather volatile Wall Street too? Since we are in the green on Wall Street, unlike some Asian markets today, are we to understand that much of it has been factored in?
I think a lot of it has been factored in. I think the fact that we had, it wasn't that long ago, we had lockdowns in pockets of China, including Shenzhen, one of the, if not one of the largest ports in China and also the world. So I don't think anyone's expecting anything too impressive out of the GDP numbers from China, and to compound issues, they even came in below the quite low expectations. But in the overall update from China, what was impressive though was that retail sales were quite strong. So obviously, trading, manufacturing, and transport activity and the likes were curtailed because of what's going on in China, which is essentially the kind of gateway to China's manufacturing and exports all over the world. But what's very interesting is the fact that retail sales domestically were quite strong, which tells me that if China has successfully made the transition from being a country that was 10, 15 years ago pegged as the workshop of the world, and a large portion of their economy was about people and manufacturers in China working hard and selling goods all over the world. Now we're seeing a scenario where China itself has become quite affluent. There's a massive middle class in China, and they're now essentially living off their own demand in the forms of retail sales. And this is a classic way how economies go. They start off in agriculture, they move into heavy manufacturing, they move further along the stream, and the economic cycle, as it were. And then now it seems as if China is becoming more and more economically sufficient. So if you do have ports being locked down and obviously other commercial hubs, it isn't necessarily as a big a deal as it once was, let's say 10 or 20 years ago, when China was much more heavily focused on manufacturing goods for the rest of the world. In relation to sentiment, the very fact that financial markets, here in Europe and also in the US have moved higher, despite the pretty terrible GDP print by China, really shows that the retail sales figure was the more important factor. But also in the current story of what upsets the US and European stocks, it's more to do with concerns about recession and also high levels of inflation rather than China.
David, if China has been a workshop of the world, do you see India, which for the large part has missed that ride as far as the manufacturing sector is concerned? We have jumped towards services right from agriculture. Do you see an opportunity over there, and does the world see it as such?
I think the world would see it as such, because although China is becoming more and more economically self-sufficient, one of the kind of criticisms, or one of the drawbacks of doing business with China is that the Beijing authorities have a stringent COVID-0 policy, and with that leads to economic uncertainty. If you're doing business with China, can you be assured that your work that you want done will get completed? For all we know, certain regions, certain cities, of course, could fall under lockdown again. Whereas somewhere like India can actually step into the fold in that regard. And in this kind of post-COVID world, in this world of where with Russia invaded Ukraine, I think countries and companies will be spending much more time thinking about who they're actually trading with, what's the reliability, how and so forth, rather than just purely cost, which was more the model 10 or 20 years ago.
Which are the companies, which are the sectors, do you think, that may look at India more favorably right now? Because Alibaba's US-listed shares, they dropped more than 4% overnight. And this has happened after the Wall Street Journal reported that the company's executives were summoned by authorities investigating theft of police data. It's something that India has created a market for itself for. Do you see tech-related companies looking at India more favorably now that the Chinese economy has trouble, and some of those companies have been taking a beating within that area as well? Even today, when you look at heavyweights like Tencent, Meituan, they are getting beaten up in trade. But is that a sign of things to come, that tech perhaps might look at India as a hub?
I think that certainly would. As I mentioned, people are going to be spending more time focusing on who they do business with. And it wasn't that long ago, 6 months ago or 9 months ago, we had scenarios whereby the Beijing authorities were cracking down on certain sectors, be it IT or be it property or be it financial services. And investors around the world were kind of sitting up and taking notice, saying that perhaps China isn't as open and as kind of embracing free markets as initially thought. And with that, the likes of IT, possibly pharma as well, and kind of medical device products, these are the sort of sectors which you could easily kind of drift over towards India.
David, but there is a lot of talk about the slowing Chinese economy spurring huge stimulus in China. We've spoken about it on the show as well. Do you see that coming? And if so, then how does that alter the scenario?
I think the stimulus in China is very much on the cards. As you've seen over the decades, the authorities in Beijing are more than happy to ratchet up debt, pour more money back into the economy as a way of driving things along. I think we've discussed before how one of the possible spending programs is more to be on infrastructure and also infrastructure projects around China. That will probably give more of a domestic boost to China rather than actually an international boost. So whenever we do hear stories of relief packages being announced, that typically tends to boost stock markets around the world. But the reality is, will it actually change the state of global play, or will it just impact the domestic country, in this case China? So I think the more and more China goes down the route of raising debt and actually spending it on infrastructure projects and the likes, be it electricity, or be it power, or be it telecommunications, I think it's going to have kind of diminishing returns. It'll surely lift markets, at least in the temporary, but will it really actually turn around the Chinese economy? That's what international investors are going to be looking at.
David Madden, always a pleasure chatting with you. Thanks very much for joining us on this edition of India Tonight.